Hi, you won't get rich quick. And anyone saying otherwise is either lying or trying to sell something to you. And that mindset of chasing quick wins is what keeps you broke. And I'm going to show you that with numbers and charts. Finance influencers show accounts having risen 300%. You hear about crypto altcoins doubling in a day and retail millionaires from investing and trading. And that makes you feel like you're behind and you're missing the boat. And an anxious investor makes emotional decisions, and that can lead to blown up accounts. But here's the real problem. You don't need to make money quick. You need to stop losing money. If you lose, for example, 10%, you need to make back 11.1% to break even. If you lose 50%, you need to make 100% gain to break even again. If you lose 75%, you need to make a gain of 300% just to break even. And all of this is amplified by the FOMO cycle. You, and I'm not talking about you, dear viewer, I'm talking about the general you buy high, you sell low, and then watch the market or asset recover without you. And it's not the market destroying accounts, it's emotions and emotional investing and trading. And you might be thinking, okay, old timer, although I'm not that old actually, okay? Or you might be thinking, okay, old timer, let's see some graphs, let's see some actual stuff. I don't want to just see you talk, but okay, we'll get there in a second. I just want you to understand that the point is, key is to not lose money. You should stop trying to get rich and start trying not to lose money. The path to wealth is through not screwing up. And even if a high volatility and high risk strategy or trading strategy, for example, on average is supposed to give you high returns, if it gives you, for example, a 50% drawdown, most people can't stomach that. You would cut off the strategy, and then that theoretical gain that you would get from the high risk doesn't even materialize. Slow and steady wins. So over 30 years, a disciplined and diversified portfolio returning around 15% per year turns 10,000 euros into between or around 600 to 700,000 euros. And let me show you what that looks like. This is a steady and diversified portfolio, meaning it returns around 15% annually. It is somewhat volatile. It has bad years. It sometimes goes down, but overall, the trend is very smooth and upwards. And red lines are high-risk scenarios, meaning, for example, gut feeling trading, chasing the news, or simply volatile markets you invest in. And these also generally trend up. I'm not saying that high risk means necessarily account blow up. And occasionally, one of these high risk scenarios even lands above the median for disciplined scenarios. And this is one of the screenshots that someone then posts on Twitter, like, look at me, I got 300% return. But in total, only 15 to 30% of high-risk scenarios land above the disciplined median. But the median for high-risk scenarios after 30 years lands well below the disciplined and diversified median, often at around just 1/10 of the value, with a lot more pain. And also look at the randomness of the different paths of the scenarios. Variance can be very expensive. And if an investment is higher risk, you should be rewarded with a higher return. But what I'm talking about here, these gut decisions, these emotional trades, investing in volatile markets, which are sort of speculative bets, all of that is not systematic, and you're not supposed to or guaranteed or meant to get a higher return for the higher risk that you take on. But in the end, it's about mindset, because look at where the gains actually happens. In years 1 to 10, there is some change, of course. You gain a bit on average, should go up, but the real change comes only at the end. And if we would add another decade to this, it would dwarf all the previous decades as well. And there is no shortcut to that. You have to survive the boring middle to get there. But what am I even saying? My point is that you should not focus on returns so much as you should focus on risk management. It needs to be risk management and capital protection first and returns second. And with any investment, always ask, what's the worst case? This strategy will feel boring while others post the wins and brag about their 300% return. And you might feel fear of missing out when you are not chasing the next 10x trade. But that fear of missing out is the actual test. And it's a choice of, feeling good and cool today versus actually winning and being rich in a few years or decades. So the conclusion is that the path to wealth is to not lose money. And the key to that is managing risks and controlling your emotions. I hope this helped you in any way. Remember that this is not financial advice. I do not advise you to buy or sell any specific asset or whatsoever. Always consult your financial advisor. And if you want to check out this dashboard visualization yourself, the link is in the description. Just go to the GitHub repository, download the HTML file, and open it in any modern browser. It should work. Other than that, hit the like button, smash the subscribe button, and hit the bell. And thank you so much for watching.